Welcome to Dual Edge Research, different markets, one research philosophy. We believe successful investing isn't about predicting the future. It's about consistently identifying higher probability opportunities through objective, data-driven research. That philosophy drives everything that we do. Whether we're analyzing thousands of stocks or hundreds of thousands of commodity spread combinations, the process is always the same. Filter, rank, select, execute, repeat. That research powers two specialized newsletters. The Bull Strangle newsletter applies the research process to stocks and options, identifying high-quality companies for systematic option income. The Smart Spreads newsletter applies the same discipline methodology to seasonal commodity future spreads. Through research into seasonality, historical performance, forward curves, and trade selection, our goal is simple. Identify higher probability opportunities backed by objective historical data. Today we're focusing on smart spreads. Let's begin. In the first two videos of this series, we discovered that selecting the right direction and the proper leg configuration can dramatically improve a seasonal commodity spread. Today we reach the third and final round of the Smart Spreads Survivor process, volatility. By the time a trade reaches this stage, there's already eliminated thousands of lower probability opportunities. Now we're looking for the volatility environment that has historically produced the strongest results. So what is volatility? The volatility we're discussing is not implied volatility like options traders use. Instead, it's determined by two characteristics of the spread itself. First is the time from the trade entry until the front month contract expires. The second is the time between the front month and the back month contracts. These two measurements allow every historical trade to be classified as high, mid, or low volatility. Each volatility category has its own personality. High volatility offers larger price swings and greater profit potential, but also greater risk. Low volatility generally produces smaller price movements and lower risk. For many markets, the sweet spot falls somewhere in the middle. The important point is that the same spread can produce very different historical results depending on its volatility environment. Let's look at three real examples from our 500,000 historical spread combinations. Gasoline performed best in mid-volatility conditions. Wheat also showed a clear historical edge in mid-volatility, posting an impressive 95% win rate. But feeder cattle was completely different. Its strongest historical performance actually occurred during high volatility environments. Wheat illustrates why objective testing matters. Many traders might assume lower volatility is always safer. Instead, historical testing showed that mid-volatility produced the highest win rate and the strongest overall consistency. That's exactly the type of edge we're trying to uncover. Think of this as a funnel. Round 1 determines the best direction. Round 2 selects the best leg configuration, and round 3 identifies the best volatility environment. Each round removes lower quality candidates until only the strongest historical opportunities remain. The biggest lesson is that there are very few universal rules in commodity spreads. Every market behaves differently. Some markets thrive on high volatility. Others perform best in mid or low volatility. Historical data tells us which environment has produced the strongest edge. The goal isn't to trade more often. The goal is to trade better. By applying all three rounds of objective screening, we improve consistency, reduce unnecessary risk, and focus only on the opportunities where history has been most favorable. Successful spread trading isn't about predicting the future. It's about stacking probabilities in your favor. Round 3 is the final step that transforms a good historical opportunity in one worthy of the Smart Spreads watch list. In the next video, We'll bring all 3 rounds together and show how more than 500,000 historical spread combinations are systematically narrowed into the handful of trades that ultimately become each week's Smart Spreads recommendations. Thanks for watching. If you enjoyed this video, visit bullstrangle.com for additional research, education, and the Smart Spreads newsletter. For a deeper dive into commodity spread trading, be sure to check out my book, Trading Commodity Spreads, which is available on Amazon. We'll see you in the next video.